TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials right now down 50. You get the NASDAQ off 9. S&Ps are off 7.5. Gold's down 5 at 12.08. You have silver up 3 cents at 16.62. The bond market, the 10-year is down 17 ticks, 128.13. 30-year off 2 full points at 159.13. Oil is up 19 cents at 57.27. King dollar's down 689 ticks at 95.51. The euro is up 92 at 110, and the yen is trading up 17 at 119.02. Now, what do we have out here today? You get Fed announcement at 2 p.m. And what's going on with this announcement, folks, is this. This is the last meeting until June 17th. So bottom line is that you can expect there's going to be some action out here. We'll see whether it's going to be status quo. I expect it will be status quo. But inside that announcement, this is the last time that the Federal Reserve is going to be able to speak to the markets. We'll take a look at the S&P. What you have with the S&P is this. The futures this morning were as low as 2095. And you talk about deviant, folks. Okay, this is about as cool as it gets. Right now, we're 2104. And the way this is trading, I suspect what you're going to see is that as we come up to inside the Fed meeting, this thing is going to actually try to lunge higher. Why? Because what you have here is this. Intraday lunging higher. When the Fed comes out, market likes to get highly volatile in a huge way. Bottom line is that what we had done out here this morning, as you came down intraday, you were basically pushing into the intraday of yesterday. You had lighter volume. They spiked it higher. I suspect you're going to get a couple spikes. When all said and done, at the end of the day, I do expect you're going to have a lower intraday high volume spike, which will send us down lower in the next few days. But as we go into this trading day, the futures were down about 18 points. You can expect they're going to go to flat. Gold market. What do we have with gold? Setup in gold, folks, is going to be the same type of setup in the S&Ps. The gold's going to be up, down, and all over the place. We've done 70,000 contracts thus far, and what you do have, the gold is going to try to press the highs. Now, and what is it all about? It's still all about this dollar. What the dollar is doing is this, and this is where I'm coming from with this, meaning in the whole market take. The dollar index right now is at 95.42. The high volume swing low, which has been making its way down there on the 18th of March, is at 94.76. I expect we're going to get down there. However, the volume characteristic, we have heavy volume in the dollar index right now, but it would have to double up. It would be 102,000 contracts. That's where we're down there. I expect you're going to hit it. You're going to bounce off it. Bottom line is that the volatility's out here in spades. Now, let's go over to the bond market. What we have with bonds is that bonds are getting crushed this morning. They're coming down to also the March 6th level. That March 6th level, the high of March 6th was 159.07. We've hit 158.22. And what I expect you're going to see there also is a rejection of price. Why? Because the amount of contracts down there on the 30-year, 385,000. You know, we'll see whether we get down there with that amount. There's a lot of volume right now. There's 200,000. You know, we'll see whether we get a rejection of that 159.07. I do expect you're going to have that. So what are you set up for today? High volatility, lots of movement, down and up. End of the day, though, what is the number? The number, folks, in the S&P is the October 15th swing low, which is dramatically lower. Markets out here today, highly volatile. End of the market day, I suspect we're going to be flat, even though we were down so dramatically in the futures market. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Thanks for being here, folks. Have a great day. Have a safe day. Look forward to speaking to you right back here tomorrow morning.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the Future Economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.